Today's financial market update, the most important market insights you need to know. Market sentiment is bearish. Market is declining across major indices. Index performance: S&P 500 at 0.89%, Dow Jones at 0.75%, Nasdaq at minus 1.07%, Russell 2000 at minus 1.73%. TMDE experienced a remarkable surge of plus 233.98%, driven by exceptional earnings within the technology sector. The significant rise in TMDE suggests strong investor confidence in the technology sector, indicating potential for further growth. Consider adding technology stocks like TMDE to your portfolio, capitalizing on the sector's robust growth and earnings potential. Oil prices have surged by over 20% in the last month, primarily due to ongoing geopolitical tensions affecting supply. The rise in oil prices signals a potential resurgence in inflation, which could lead the Federal Reserve to reconsider interest rate cuts. Consider positioning in energy stocks or ETFs that could benefit from rising oil prices as inflation concerns grow in the market. Best Buy's Q4 earnings per share reached 2.61 cents, with operating income soaring to $721 million. The strong performance from Best Buy indicates consumer resilience, suggesting stability in retail despite broader market headwinds. Consider increasing positions in Best Buy to capitalize on consumer spending resilience and strong operational performance. Consumer confidence is declining, driven by the recent surge in crude oil prices, which hit their highest level in over a year. The increase in oil prices indicates potential inflationary trends that could diminish consumer purchasing power and overall economic confidence. Consider investing in defensive sectors such as utilities and consumer staples, which tend to perform well during economic downturns and rising prices. The Federal Reserve reduced the federal funds rate from 4.33% to 3.64% between January 2025 and February 2026. A decrease in the federal funds rate typically fosters an environment conducive to consumer spending and business investment, signaling confidence in economic recovery. Consider increasing exposure to real estate investment trusts, REITs, which often benefit from lower borrowing costs and increased property demand. Rising oil prices have surged to over $90 per barrel, straining U.S. consumer spending and economic growth. The increase in oil prices signals potential inflationary pressures, suggesting that consumer goods and services may become more expensive. Consider investing in energy sector stocks, as rising oil prices may benefit companies involved in oil production and distribution. Rising geopolitical tensions in the Middle East have contributed to increased oil and natural gas prices, sparking investor interest. Heightened oil prices driven by geopolitical unrest are likely to fuel inflation concerns, impacting corporate earnings across various sectors. Consider increasing allocations to energy-focused ETFs, as they may provide opportunities amidst rising commodity prices. The U.S. dollar has strengthened significantly, while developing nations' currencies have dropped by approximately 0.5%. The strengthening of the US dollar indicates a flight to safety among investors, signaling increased demand for stable currencies amid uncertainty. Consider allocating funds towards US dollar-denominated assets to capitalize on its strength during periods of geopolitical uncertainty and market volatility. Heightened geopolitical tensions in the Middle East have caused a 5.7% drop in Lam Research stock. The decline in major semiconductor stocks signals investor anxiety about supply chain disruptions and rising production costs amid escalating geopolitical tensions. Consider investing in energy stocks or ETFs that may benefit from rising crude oil prices and increased demand for energy resources. Crude oil prices have surged by over 10% in recent weeks, driven by escalating tensions in the Middle East. Rising oil prices historically correlate with increased inflation, which could prompt the Federal Reserve to delay interest rate cuts longer than anticipated. Consider adding energy stocks like ConocoPhillips to your portfolio, as they are likely to benefit from rising oil prices and strong cash flow. Rising U.S.-Iran tensions have caused oil prices to surge above $90 per barrel, significantly increasing China's energy costs. Higher oil prices may lead to increased inflation in China, which could slow down domestic consumption and economic growth. Consider investing in energy companies that focus on alternative sources, as they may benefit from rising oil prices and supply chain disruptions. U.S. government bonds are losing their appeal, with 10-year Treasury yields rising to 4.5%, a significant increase from earlier this year. The decline in bond safety indicates increased market volatility, signaling investors may prefer riskier assets over traditional safe havens like treasuries. Consider diversifying into inflation-protected securities like TIPS to safeguard against rising inflation and protect purchasing power. Mortgage rates have surged sharply, reaching levels not seen in recent weeks due to geopolitical tensions impacting global energy supplies. The increase in mortgage rates may lead to diminished affordability for homebuyers, potentially reducing overall market demand for residential properties. Consider diversifying investments into luxury real estate segments, as they may offer stability and continued demand despite rising mortgage rates. Evergreen funds are experiencing rapid growth, with over $300 billion in assets under management as of Q3 2023. The surge in evergreen funds indicates a shift towards more flexible investment structures, appealing to investors seeking liquidity and consistent capital. Consider allocating a portion of your portfolio to evergreen funds, particularly those with a solid track record and transparent management practices. Microsoft stock increased by 3% following a notable 26% rise in cloud revenue and 39% growth in Azure for Q2 2026. Microsoft's strong quarterly performance highlights robust demand for cloud services, indicating a positive trend for tech sector investments and overall market confidence. Invest in Microsoft to capitalize on its projected 57% upside, as strong cloud performance indicates ongoing growth potential in the tech industry. The M2 money supply in the U.S. has surged by 12% year over year, yet it hasn't positively impacted Bitcoin's price. The disconnect between rising money supply and Bitcoin's stagnant price indicates market skepticism regarding digital assets as a hedge against inflation. Consider diversifying portfolios with stablecoins or other digital assets that can provide a safety net during periods of high volatility. Enphase Energy has introduced its new IQ battery line, improving solar energy storage for residential use across the United States. The launch of the IQ battery signals a significant shift towards more efficient energy storage solutions, which can enhance returns for solar energy investments. Consider investing in Enphase Energy to capitalize on its innovative battery solutions and expected growth in the solar energy sector. Thank you for watching FERPA, your financial Sherpa.